All right, this one here, this one is for the folks who swear the IRS don't know about that money. Let me tell you something. They know. Uncle Sam and the boys, they know. Side gig money, they know. Cash App, they know. Random payout you got from selling sneakers, they know. You zelled your friend back for something, but it looks like income, well, now you're piquing their curiosity. Today, we're going to break down every type of income you probably forgot was taxable and why it matters and how to report it without getting smacked with penalties. Welcome back to another episode of Millennial Gems. I am your host, AKILA. And you already know we ain't wasting no time. And remember, all the money you thought was invisible, think again. Nothing is invisible. All right, let's get right into it. Ain't gonna waste no time. So, let's talk about what nobody wants to accept. Or probably what some people just don't want to accept. If you accept any type of business income through Cash App, Venmo, PayPal, that's considered income. Taxable income at that. You see, these platforms are designed to report any type of steady income or high flows of cash flow anytime they pass through they come across on their platform. And even though if they don't send you a form because you haven't hit the threshold, you're still responsible for paying the IRS. Now, if you got money from selling products, services, consulting, content creation, business payments of any kind, that bag is taxable. Now, if it's personal, like you paying, your friend back for like food or, sending somebody some gas, that's not taxable. But you do need to have clear records to prove that it isn't. And, I've mentioned on many episodes that, the IRS model, you either prove it or lose it. So, let's talk about 1099s, right? So, as I kind of mentioned with these platforms, right? PayPal, Cash App, Venmo, they have to report it. And there's a certain form they have to send out. And it's a 1099K. A 1099K is simply just when you receive it when you receive payments through payment processor apps. And most of the time it's based off of like transactions, not whether so much of, you think it was business or not. I think as far as like total transactions, I believe it's 200 and the threshold is about $600. So if you exceed $600 on these apps and you have probably up to close to over 200 something transactions, the IRS first of all, these payment processor apps are going to obviously have to send you a form, a 1099K, and then yes, you're going to have to report that to the IRS. And remember, even if they don't send you a form because you didn't hit the threshold, you are still responsible to report that income. Tell you, man, don't play no games with Uncle Sam and them, because they don't care if you didn't get a form. I don't get a form away out of paying taxes. I just don't see it happening. I've never tried it, and I probably won't ever attempt it because I'm just not gonna do that. I ain't stupid enough to try to play with Uncle Sam and them. All right, so let me talk to my resellers. If you sell sneakers, furniture, old electronics, clothes, collectibles, anything for a profit, what have I been saying? It's taxable income. Profit equals taxable. Selling at a loss equals no tax, but you still need documentation. You say you sell your old PS5 for less than you bought it, not taxable. But if you flip it for more, yeah, that income's taxable, champ. Don't play yourself. And this is if you're selling like on these marketplaces. So like, eBay, Facebook Marketplace, StockX, Poshmark, any of those platforms that you sell things, Amazon Marketplace. You're looking for profit? Yeah, it's going to become taxable. All right, so let's talk about some of these side hustles that maybe some just think they can probably get away with not reporting to the IRS, that they don't believe are taxable. So let's break down the ones probably most people know. DoorDash, Uber Eats. Regardless if these are small side hustles and, you probably don't make much and the base pay isn't that much, you still have to report that income. Even if you don't meet the threshold, you need to report that as income. You have things like Airbnb rental income. If you do photography, if you do dog walking and babysitting, tutors and coaches, personal trainers, repair services, any type of digital products. Shoot, even all you women who out here doing OnlyFans, yes, that is income. Milking these men's pockets. Yes. You have to pay your taxes on your OnlyFans money. Amazon resellers, I've done that. Running errands for folks, selling at flea markets or pop-up shops. Anything if you got paid, the IRS wants to talk. They want their chicken. They want their bread, their cut. Can't run from the IRS when it comes to that stuff. Now, let's talk about things like contest prizes, raffles, and awards, right? So we all know, like, obviously, if you hit the if you hit, jackpot, it's like $1,000 prize or something like that, that's taxable, right? $1,000 prize, that's taxable. That influencer trip you got for free, taxable. That giveaway you won, taxable. Yeah, it don't sound like much, but welcome to America. Capitalistic society. All that contest prize money, even if you gamble, all these gambling apps that people be using, all the MGMs and the Prize Picks and DraftKings and FanDuels, all those apps. If you're making like serious bread on that, they gonna send you that 1099, and then you're gonna have to report all your winnings and earnings to the IRS. They're like, nobody can escape it unless you know how to really take like a lot of like deductions and stuff like that, and a lot of like write-offs. Every single dollar you earn for profit, you need to report it. All right, so let's talk about things like refunds and cashback, right? All right, so credit cards, right? Some credit cards, they have cashback rewards, right? Just so you know, that's not taxable. So if you use your card, you swipe, and then at the end of the cycle, you're given however much cash back to your card, that's not taxable. IRS is going to look at more so as that like a discount, it's not really source of more like income. But when you get those like referral bonuses, taxable. You get those bank account bonuses, taxable. Credit card sign up bonuses, taxable. Why? Because it's a reward. What did I just talk about? Literally. I just talked about, winning prize money, raffles, and awards and stuff like that. Any type of reward, that is taxable. But you know, if it is a rebate or a discount, it's not. But if that money is a reward, it's taxable. Okay. Now, let's talk about bartering. Now, if you don't know what the word what bartering is, all it is just, by definition, is just someone selling a product or a service in exchange for, well, it's essentially just stated for free service. So, let's say you're a photographer, right? You trade, sorry, not traded for free service, but you're trading for like another service. Like, you do something for me, I'll do something for you. So, let's say you're a photographer and you trade your photos. In exchange, someone fixes your car, right? Well, you know what? Both of you have earned taxable income because you paid me to do this job and I'm going to pay you to do this job. So, IRS doesn't care if the cash never touched your hand. If the value was exchanged, it's income. And this is the deduction income intersection everyone just somehow ignores. So, regardless of whatever you choose to do for somebody and what they do vice versa, if there was money exchange between the both of you for two different services, taxable. All right. How about, let's talk about rental income, right? So we have things like rental income, obviously like short term, long term. So, if you rent out a room, your basement, your entire house, if you even, if you use like Toro to rent out your car, say your camera, any equipment that you may use, it's all taxable, right? But you can get deductions on that. So just make sure you track everything. The cleaner your records are, easier it is to lower your taxes. So don't panic. All right, now let's talk about one that probably a lot of people know of. The under the table myth, right? So getting paid under the table doesn't mean that the income disappears. Now, in no way, shape, or form am I tell you to, gonna tell you to do anything illegal, but it just makes sense that your receipts disappear, which makes it easier for the IRS to hit you with penalties later, should they find out that you were making money under the table. Again, I am not promoting or telling anybody to do anything illegal. Pay your taxes, pay your taxes, pay your taxes. But cash still counts. Cash is still income. And cash still needs to be reported. And yes, they can find out. Especially if you have pretty frequent spending habits. If your just income changes from, 1 month to, to month 2 or 3, it's just a dramatic change in your income, that's going to probably raise some red flags. That's going to definitely start to bring some eyes toward you. Definitely going to have the IRS looking to probably audit you because there was such a drastic change in income in such a short period of time. So if your lifestyle shows more money than your tax return, best believe they're going to come find you. They want to see exactly, where's all that money that's helping you fund this? Where'd you get this from? So that under the table method, myth. All right. Let's talk about maybe like one more or so. Actually, you know what? How about this? This is why you should report all your income, because it's going to help you. You should report all your income because it's going to help you long term. Let me just say that. Reporting all your income helps you long term. This is what some people just happen and may forget. Like, when you underreport, you're not just avoiding paying taxes. You're also going to affect you trying to get loan approvals from banks. You're going to probably affect your mortgage approvals, any type of business funding, credit lines, grants, anything to help contribute to your financial growth or your lifestyle. Like, you're going to really block your blessings all because you chose to try to avoid paying taxes. Let's be honest. You don't want to avoid paying taxes. Nobody should try to ever avoid paying taxes. Taxes is a part of life. Death is a part of life. You can't avoid taxes or death. It's inevitable. But you can lower your taxes. You can take advantage of doing things to help lower your tax bill, even cut it to zero. You can do things like that. But trying to outright avoid them, that's just not going to happen. That just will not happen. Your tax return is literally like your financial resume. Because if it says you make $12,000 and your lifestyle looks like 100 bands, you just played yourself out of opportunities. You need to report all of your income. Report it, deduct it properly, and you can build real wealth. And then you won't have Uncle Sam and them breathing down your back because things look like funny money to them on your tax return. So, you're probably thinking, damn, you might be winging it. I might be playing myself. It's probably time to stop guessing and get ahead of your tax season, Let me not make any more mistakes and try to avoid paying taxes. Well, you know what? How about this? Go to the link in the show notes, right? Make sure you join my VIP waitlist so that way you can book a tax preparation consultation and bookkeeping for all my business owners out there with my company, Millennial Gems Financial Solutions. See, we're going to help you clean up your income, organize your books, and now that we're about to we're still in the preseason of tax season, we're going to try to help you avoid IRS surprises, by all means. And make sure that you don't forget to purchase, which is absolutely for free, my A to Z deductions checklist and also my tax preparation checklist as well for anything that you may possibly for all the info that you need to submit for tax season. So don't forget to download that. But until then, make sure you stay paid, stay organized, and let's try to stay away from IRS penalties, all right? I'll see you all in the next one. Peace.